Hi, everybody, hope you're doing well. Today, we are exceptionally excited to talk about portfolio. This is something that's been in the works with Preptogrow for the better part of this year. And we think that's certainly going to be a huge game changer for subscribers and for folks that are looking to get into investing for the first time or looking for generally just a better experience around investing and moving away from very cost inefficient, low returning financial advisors or robo advisors. So let's talk about why we came up with portfolio. Again, we feel that financial advisors and even fintech platforms make the investing experience as hard and as confusing as possible. They set goals that are multiple years out. They make you do all the research, what to buy, what to do, when to sell, and if you are not okay with doing that work, then you could go to a financial robo advisor who will give you a fraction of the return that you could get by just investing in the S&P 500. On average, it's 45% less. Financial advisors, robo advisors are actually much less than that. They're about 80% less than just the normal S&P 500. And they charge you a premium for the little work that they do for you. We wanted to make this experience much better than it is today. We, as founders of Preptogrow, have used financial services. We've tried robo advisors. We've used other fintech platforms, and we really think it makes the experience as painful as possible. So, portfolio, why is it different? Well, we specifically go after answering the questions that are the most important to investors and traders. How do I outperform the S&P 500? When can I expect that return? And then how do I invest effectively when I have no time or I am brand new to trading? Prep2Grow's approach is to make trading as easy and as accessible and as precise to everybody that wants to use and trade within the market. Now, that's a lot of words. Let's talk about the performance. So Preptogrow's performance since since November has been a 36.7% return on our portfolio versus the S&P 500, which was a 28.3% return. Look, in any year, 28% return is amazing. You compare that against a financial advisor who averages 5.9% return per year, or a robo advisor that produced only 2.3% return in 2020, which didn't even to date hasn't beaten inflation. That S&P 500 is amazing returns, but Prep2Grow goal for their portfolios is to be S&P 500. And for the last about 7-8 months since we've been doing this and trying our portfolio algorithms and creating portfolios and recommendations, we've done very well. 36.7 return is nothing to snooze at. We have posted all of our statements on Prep2Grow so you can see the actual performance and do your own math on those if you so choose, and looking at what the gain of it is. Again, the goal of portfolio is to create a collection of recommendations that are geared towards beating the S&P 500 within a shorter time frame, and to make that experience of using and trading and investing as simple and as accessible as possible. So how does it work? It's very straightforward. You come into Prep2Grow, into your portfolio, you set up your personalizations, such as what is your risk tolerance and how much do you have to invest. You set up your trader notifications, so we alert you to when to buy recommendations, when to sell them. If you want to trade directly from Preptogrow, meaning that we handle all the complexity of placing a trade for you, we do all the math. We set all the limit prices. We do all the calculations. We place the order. And at the same time we place a buy order, we place a sell order. All those things are done through just a simple single click. Everything is handled for your end. You don't need to have essentially a college level degree equivalency to figure out how to buy and sell stocks and how to determine what things to buy. We also analyze your brokerage's account So if you want to connect your account, we can let you know what investments are at risk, which ones are great, and you should hang on to them, but also let you know for those good investments, what's an exit price you should be looking at. Is it 2% away? Is it 10% away? But giving you at least a trajectory so you're more educated about when to enter and exit positions. And then as you go through this, you just repeat. You start all over again in terms of what you're looking to do from a portfolio perspective. Prep2Grow always provides at least 10 recommendations as part of every portfolio. So if one sells, it's instantly replaced with another one. And so you always have 10 in play. What we have found is that really mitigates the risk around losses and always allows you to keep adjusting based upon market conditions and fluctuations. Sometimes there's a 4-week up cycle and sometimes there's a 4-week down cycle. Prep2Grow allows for that real-time adjustment because we constantly look at how companies are performing, what is the market expected to perform, and adjust that within your recommended portfolio. So always keeping ahead of what trends are coming. So that's a lot of talk about what it is. Let's take a look at portfolio. So this is what you'll see after you've done some personalizations for your portfolio. But once you do that and you come into it, you are presented with this self-running dashboard. Essentially, we tell you in natural language, so it's simple and highly understandable, how you're progressing on your goals. Since this person created a portfolio back in May, which was 41 days ago, Preptogrow has delivered a 40.7% gain, or roughly $1,220 for a $3,000 initial investment, or your investment is within your brokerage account. To date, there's been 100% wins, meaning that none of the recommendations that are presented have taken a loss, or at least none of the current ones have taken a loss either. And this is your return per trade. So you're averaging 13%, about 13% per trade within 4 days. So we try to make it as easy as understandable to understand how you're progressing over a time horizon, and then what are the success metrics around that. The next is we let you know what your risk threshold is, so how much you're investing and how it's broken out between your risk threshold. So I've selected a moderate risk for this portfolio, so that means 3 options, 7 stocks. If you're looking for ultra conservative, then you'll have ETFs and stocks. Or you're looking for hyper aggressive, it'll all be short-term options. And if you want to change your allocation anytime, you just click on this icon right here. It'll take you into it and you can change it around. So if I want extreme risk, 100% options. Elevated risk, it could be 50-50. Mild is all stocks and ETFs. And moderate risk is just a combination of stocks in options. The next thing that we do is we provide a time horizon for all of this. What you see here in the return section is that when are we expecting to have a predicted return? So we're predicting that you have a return of $1,400 by September 24th. Now that's a long horizon for an additional $200, which you've already gained in the last 41 days. So let's talk about the reasoning behind that. So, there's a hockey stick gain here, and that's great. And that's what we really want to deliver from Prep2Grow. The reality of it is that projections are grounded in a little more realism. Option trading is highly volatile. Stock trading is volatile. There's a lot of up and downs, and you saw that in the previous graph where we talked about our comparison against the S&P 500. So we bring a lot of realism, or I should say over-realism, into this. So this is essentially worst case based on our predictions. This is factoring in and predicting that there's going to be losses. And if you have an options, we factor that there's 100% loss on an option, potentially. And we also factor in the worst time horizon to that gain. A lot of what Prep2Grow does is take actual recommendations and put them in the market and understand how the market actually reacts to our recommendations. How long does it take to sell? What's the best case? What's the average? What's the worst case? And what is the return depending upon those time horizons? And so this is the worst case. We want to do better and hope to do better. And as you've seen, from an actual perspective, it has done better. within the first 41 days. But let's get realistic. Trading is highly risky. Portfolios are highly risky. And so you got to go with the notion of being realistic about it and potentially thinking you may take a loss. So underneath that, giving you, the good time horizon and hopefully understandable language, we lay out the recommendations for you. So these are everything that we're recommending you buy. So again, you can filter between stocks and options. You can see which ones have sold. So 13 options have sold, 5 stocks have sold. You can quickly sort through it. You can look at all the ones that I want to buy or have slotted to buy. And if you want to, you can download everything to Excel and track it in Excel, or slot it into this table view and have a bit different view. So if you are trying to decide what to buy, we provide all those details for you. So in this case, let's look at F&B. So going into this detail, I can see some company details, what kind of company it is, what market segment they're in, if they're on part of any ETFs, so no ETFs actually hold this company, what their forecasts are, what's their next earnings date, but also we provide a lot of reasoning around why you should buy. So what's the current price and how high are we expecting it to go? What's the maximum return we're predicting for this? In this case, we're predicting that this option could potentially return 31%. And then we provide that comparison against their actual stock. So we're expecting the stock to go up 11%. So when we look at timings of this, so how soon should you expect to gain, or what are we predicting to be the gain? We predict for every recommendation we put into the market, which is an actual monitoring how it does, 97% of time for the recommended buy for this option, 97% of the time, or 66 out of 68 times, it's sold within 5 days. Now, if we look at the 30-day success, which means we recommended this call and we predicted it would sell within 30 days, 98% of the time, or 75 out of 76 times, it sold within 30 days. And so for us, this is a very high degree of accuracy for us, and we feel confident in recommending it to you. If we don't have a higher success rate, as you're seeing here, especially for options, we won't recommend it. And so then we actually put this in a time horizon. So you can see by July 7th that this option should sell. And in the worst case is July 26th. And so July 26th, if it hasn't sold, more than likely it'll have a much higher difficulty in reaching its targeted gain. And we'll provide alerts around what to do in that case. But again, it gives you the time horizon and dates around this. So everything that you saw in that predicted return graph is based upon this worst date and a return that is our normal return for options, which is 15% is what we target for. Underneath that, you have your buy details. You have pre-market movements. Preptogrow is, I believe, the only company in the market that actually predicts what the opening price of an option will be. So our goal, our guidance for you is to only buy when these numbers are positive. And I'll show you what that actually looks like in a sec. And then we have stock pricing, and then we have news, and then we have some learnings if needed. So this is how you decide. So if you decide you want to buy it, in this case, it hasn't been linked up to the trading account. And so if we want to buy it and have it trade directly to our trading account, we can do so. But if you don't want to do that, all you do to track it and to turn on notifications for it is just click on the buy button. This will then flag to us that you want to buy it or have intended to buy it. And then we sell you all the sell alerts and the tracking around it and the monitoring of it to you. But if I wanted to link this to my account, all I have to do is to go back to this icon here. And at the above, I can link my account. So there's 2 linkings that we do. The first is to link to analyze, and the second is to link to trade. Based on feedback from people that we took a look at this and went through beta, they were very adamant that they wanted this separated out. Some of them were okay with us analyzing the current investment accounts. Other people didn't want us to know anything about their investment account, but they still wanted to be able to place trades from Preptogrow and allow us to handle all that complexity for them. So that's why there's two separate things. So if I wanted to analyze, all I have to do is to go and click on Analyze. We have an integration with Plaid. And then you select the broker that you want to go into and link to it. And you can connect your account. Same with Link to Trade. So let's look at a portfolio that has all this set up, and you can see what that experience looks like and see the differences. So this is a new portfolio that's been created in the last 3 days. Nothing has sold yet, but you're going to notice some stark differences. The first is on the investing side. We have the actual investment account size to your linked account, and this is linked to Ameritrade. And then as part of that, we analyze all the investments that are with your portfolio. Stocks, options, ETFs, so on and so forth. As part of this beta that we're currently in and we're exiting this month, we're looking at a subset of that, or essentially 700 companies that we're tracking. When we exit beta, we'll actually be able to analyze every single public company within the United States and every ETF within the United States. So we'll be able to predict and give recommendations and analyze what to do about it. So in this case, there's 5 that we've analyzed. 4 of them are good, great shape. Don't need to do anything about it, except we do provide a predicted exit price, and then one's at risk. So let's take a look at that. So you can see the breakdown here. So let's take a look at what that means. So if we look at the one that's at risk, it's a Great Western Bank, and it says no gain. We have hover over, so you can take a look at that, what that is. So at this point, what we've predicted is this company has already met its target and is no more real gain possible with it. So we don't expect it to go above its current price. And so we're raising this as a risk because there's just no gain, and the recommendation would be to exit it. Now, the 4 that are good mean that they still have a lot of gain left into them, and you should hang on until you hit what would be either a good gain for you or based upon what our predicted sell price would be. So in this case, $39 is our predicted sell price. We also provide in there what is the maximum gain that we're predicting for this. So ACI is expected to go up another 6.7%, but a safe exit is at $39.97. So that's what it means to link it. We provide this kind of information in detail and let you know what's an exit point, which ones are no longer has any gain or expected to go down. But again, give you at least targets about what to do. Again, our goal for portfolio and for Preptogrow in general is to do all the work for you, all the analysis, understanding where the company is going, what is their predicted performance, and how does that performance impact their stock price, and how does that company's performance impact the general market. So ETFs are part of the markets, mutual funds, etc. So how is that going to have some form of cascading event? Really, again, bringing an institutional quant and perspective to the retail investor. If there's something we can't analyze, it's in here. Again, just part of beta. We haven't analyzed it, not part of our beta analysis group, but will be when we go out of beta. So what does it look like to buy? So I've linked here my account to Ameritrade, both on the analysis and on the trade side. If I want to buy, let's say Bar Harbor for a second, and I've looked at it, all I do is I click on this button. It brings up the buy recommendation. It tells you, what's the price, what's the order type, how many shares you should buy, and what's the total cost. So again, with the recommendation of having trend trades at once, this is really just your investment amount divided by 10, and that's how every single recommendation is broken down to how many shares should be bought. If there's fractional shares, or if your platform supports fractional shares, we'll have fractional shares. If for some reason it doesn't support fractional shares, or it is an option, obviously you can't have fractions as part of an option contract. So we don't have fractions. In this case, if I want to buy an option, I do the same thing. I click on it, but I have a slightly different view. So I have our recommendation is the trail buy. You'll be able to switch to limit as well if you want to. So give you some flexibility, how many contracts you should buy. So we do all the math, and then what's the cost. And so the cost is, option price plus trail buy plus number of contracts. If you want to play around with it, it updates it within real time. So let's say I'm going to place this actual order. I'm going to put it so far out of the range I want to execute right now. But all I do is I place this, and if I want to buy it, I hit buy. And then if I go order success, so if I go over to Ameritrade, if I refresh this, you see it's placed immediately. So you see that it's been ordered, the time in force, and what the symbol of is. So we just placed that. So let's say I've placed it and I've reconsidered and I no longer want to buy this from Preptogrow. All you have to do is hit cancel or click on the $ again, and I'll cancel the order. And so I hit cancel, order successfully canceled on the integrated platform. And then if I refresh this, it shows as canceled. So again, you can handle everything within Preptogrow. Again, we hide all the complexity. That's our goal, to make it as simple as possible. You don't need to understand what a limit is. You don't need to understand, okay, what expiration date do I need to find at what strike price? All that analysis is done by the Preptogrow, by Preptogrow's AI. It's constantly working 24/7 to determine what's a recommended buy, how is that company going to perform, and does the constant updates with this. So Flex today is a good buy. Maybe tomorrow it's going to be a bad buy, and so it won't be recommended. And if you have it, we'll recommend that you exit it and go on with it. The other thing that we do is if you do place a buy and it does execute, an immediate sell order is placed. And that sell order is a limit price that is based upon the targeted gain for that option or stock. For stocks, our target is 5%. For options, 15%. You can adjust that if you want to have a higher threshold, but we have found anything above 5 and 15% for short term is risky, especially for options. The longer you hold on to it, you're finding time decay. And so the goal for options is to get in and get out as quickly as possible. So that's how you set up trading and analysis from Preptogrow. We're very excited by this, and we hope that this simplifies your investing experience greatly. So let's just jump into like the AI side of this and how all of this works behind the scenes. So this is, in essence, the Preptogrow product platform. So our approach is that we wanted to bring institutional quantitative analysis and approaches to retail investing. So essentially what the Goldman Sachs of the world have. We create this big data and AI platform with the original intention of predicting how a company will perform. We never started off with the intention of predicting stocks. However, because we went with the approach of predicting company performance, or what we were calling McKinsey in the box, we take a bottoms-up approach to determining how a company's stock will perform and how does that cascade into the rest of the market. A good example is if, say, Google is predicted to do poorly for some reason, that will certainly have a negative drag on the market. And so we can understand how that's going to occur, when it's going to occur, and if profit can be taken from that. So our approach to this is that on every minute of every day, we're collecting literally millions of data points around a company and all the companies that we track. Patents, technical analysis, labor market indicators, you name it, we probably collect it for the company. And then we bring it in and we analyze it, and we apply additional calculations and algorithms to it, and then we start to predict how a company will perform. And that company is kind of the standards, just going along in the day, not a whole lot of up and downs. It won't progress. And it'll get filtered out as a company that's not going to have any profit taken from it. But if a company is predicted to go, say, be negative or positive, we'll start to predict when that will occur, what events lead up to that, events being acquisitions, misses in revenues, higher than normal attrition rates, or whatever it may be. And then we assess the timing behind it. And then we assess how much profit can be taken from that event. And if that profit taken can be has a cascade effect onto ancillary companies. Like, I don't know, if Google misses, Facebook will probably miss. And then that'll impact the QQQ ETF because they're part of that ETF. And so we can understand the impact of it. And then we can take profit through many different channels because of that individual company's performance. And so if that all still makes sense and there's enough profit to be taken, then we'll start going into the technical and sentiment analysis of it. Is there any friction in it being able to go up or down based upon moving averages and option activity or whatever it may be? And then we'll look at the sentiment. So clearly not all companies are created equal. So if a company like, again, Google has a bad quarter, it'll have a cascade effect. If a small bank, maybe like First Bank, misses expectations, it'll have a very limited and muted impact outside of that. And so that's okay. But we really want channels where we can have multiple touch points for gaining a profit. The next is we personalize it and allocate it. So personalization is just, what's your threshold? How much do subscribers willing to spend on a trade? And what is their time horizon for a return? We also look at how do we allocate recommendations more around options. And so if we recommend an option that has less than 100 volume and maybe 150 open interest, we're only going to recommend that to a couple subscribers, and then we will stop recommending it. The challenge is if you give that option, again with 100 volume and 150 open interest, to 8,000 subscribers, it's going to lose money because you have a lot of undue influence on it. So we make sure that we're allocating it enough to make profit, but not enough to make it fail. And then once we release it to our subscribers, they can action it. And if they do so, we monitor it, we'll make adjustments to it, and we'll alert people to any selling or buying activities that need to occur for it. Adjustment being, we're constantly monitoring what's the potential gain from it. And that changes every minute of every day. And so if the gain goes from 30% and all of a sudden it dramatically shrinks to 10, then we'll let you know, and we'll reset a lot of the sales targets related to what we're predicting to be a change in potential gain on an investment. And then once that's all done, it's created into a portfolio, and then that then ties into brokers. And so now this platform, what you're seeing here, is really around how we predict equities. So options, stocks, ETFs. We have the same kind of philosophy that's coming up very soon around real estate and cryptocurrencies. And that'll be coming into the platform within the next 2 to 3 quarters. And we're very excited about that. We're in the initial stages of testing it. As we showed earlier in this presentation, we've been testing and trying and improving upon portfolio since November of 2020. Same things happening today about real estate and cryptocurrencies. And so we're very excited about that piece as well. And then being able to bring the same kind of simplicity, accessibility, and hopefully one-click buy and sell to real estate and to cryptocurrencies. So this is the platform itself. Again, we are incredibly excited about Portfolio. It's been in beta for a while. We're opening up to everybody to beta this week. We'll be in beta for about 2 more weeks just to work out all the kinks. And then it'll be released en masse to every subscriber that wants Portfolio as part of their Preptogrow subscription. Again, very excited. The teams have done a lot of hard work on this. And so much appreciate all that work, and much appreciate all the feedback that we've gotten from subscribers. And they are very positive about their feedback and what they've experienced with it to date. We thank you for your time. And as always, if you have any questions, please reach out to us. Happy to answer any questions you may have. It'll be contact within the description of this video, or just reach out via contact@preptogrow.com, or just go to preptogrow.com. As always, happy trading, and we'll talk to you again soon. Bye-bye.